We've had a negative view on the Aussie now for the past year, or since I've started at BetaShares, and it's certainly come to fruition. In fact, the currency's probably held up a bit higher for longer than I thought. Two things bearing on it: commodity prices still under pressure. Interest rate differentials versus the United States are probably still going to go in the favour of America. We're looking at the US raising rates as from September. I still think we're going to get at least one, possibly two interest rate cuts further in Australia. So the combination of all those factors, interest rates, commodity prices, there's really only one way for the Aussie to go, and that's down. And my year-end target for a number of months now has been 68 cents, and I still see no reason to change that view. Look, it's hard to see interest rates having a big impact, and people say, well, if interest rates aren't going to have any impact, why should we cut rates? Well, at the end of the day, it's better to cut rates and have some effect on the economy than none at all. So they will have a positive impact, but I don't think we can get carried away to think that the economy is going to rebound strongly, partly because households these days have a lot more debt than they've had historically, so they're not as responsive to interest rates as they were. A lot of businesses in Australia, they still are labouring under a high Australian dollar, and so when that comes down, it might turn things around. But again, it's hard to get a big impact in the sort of non-mining export areas where the currency is still quite high in real terms. But at the end of the day, the Reserve Bank looks at the economy. Unemployment is high and rising. Inflation is under control. Their job is to support the economy, and their one instrument is interest rates. So at the end of the day, if you think the economy is weaker than it should be, and inflation is under control, they should be cutting interest rates, and which is why I think they will. Look, the biggest impact would be fiscal policy, and a major infrastructure program by the federal government. And the problem is, we've been led to believe we have a budget crisis. The deficit is cyclically quite high, but a large chunk of that is because the economy has been quite weak for a number of years. Net debt as a percent of GDP is still only around 12-13%, so it's not high. What I would like to see the government do is actually create a separate class of debt, and call it infrastructure debt, and use that money to fund infrastructure projects that have been sanctioned by Infrastructure Australia, for example. We don't want a situation where the money is misspent on politically convenient projects, but there is definitely scope, despite all the talk about fiscal crisis, budget crisis, there is scope for the government to raise debt at historically cheap rates and pay for some of the infrastructure the country needs. That would be, I think, the single best contribution that either the government or the Reserve Bank could make to growth, and would be a great confidence booster for the business sector.